What is up, guys? Joe here, back with another video. Today is Friday, October 22, 2021, and Snapchat is trending. Snapchat is down over 26% for the day because they just reported their Q3 earnings and missed revenue exits for this quarter and lowered their guidance for fiscal 2022. With that being said, I wanted to dive deeper into some headlines, do some technical analysis, and why I would personally recommend this stock is a buy at the $55 price point. So let's dive in. So here are a couple of headlines surrounding Snap today. So if we jump over to FinViz, here are a couple of headlines. Snap stock plunges as digital advertising ecosystem takes a hit from Apple supply chain issues. Snap stock plunged on Friday as its September quarter revenue missed guidance and also drove down shares in Facebook stock, Twitter, Alphabet, Google, Pinterest, Trade Desk, and others in the digital advertising ecosystem. Snap delivered spooky Q3 results and provided a scary Q4 outlook. Apple was called out as one of the culprits, combined with the impact of supply chain disruptions and labor shortages at advertisers. Here's another headline. Snap stock gets hammered as Apple's privacy crackdown stings advertisers. Snap stock was down more than 23 in early morning trading Friday morning after its earnings report sharply missed revenue expectations the day before. Why the big miss? CEO Evan Spiegel said Apple's recent privacy changes to iOS hampered advertisers' efforts to track their campaigns. Our advertising business was disrupted by changes to iOS ad tracking that were broadly rolled out by Apple in June and July, Spiegel said during the company's earnings call. So now jumping back into FinViz, we do see that Snap has been in a general uptrend since the beginning of the year, and it has been gaining momentum throughout the months. And if you see this blue line down here, and you do see it has been trading within this channel, this blue line down here would act as your support, and this pink line above would act as resistance. And as you can see, Snap broke this channel and actually ended lower and closed today at the $55 mark, and it posted a previous high of $83. So we can look at it the same way within TradingView. Here's your daily chart. We can grab our trendline tool, draw our support bar down here, and above draw our resistance line. And as you can see, Snapchat was trading in this channel and finally broke support today and closed at the $55 price point. And also you can see every time it was respecting the channel and it would bounce from support here, here, and here, and also it would get rejected at the resistance line here and here, rejection, and finally here. But today it broke through all that and ended here. And as you can see, also I do have my moving average in blue here. This is my 200-day moving average, and it actually broke through that as well. Let me illustrate that for you. This blue line, 200-day moving average. So now it's way oversold at these levels. If we look at our RSI down here, our relative strength index, Snapchat is at extreme oversold levels. It's currently roughly at the 21 point mark on the RSI, and anything below 30 is considered oversold and a good entry point to go long on the stock, and anything above that 70 or above is considered overbought, and that's the time you want to sell or go short. But because the stock is at such an extreme sell condition, this would be the perfect entry point for investors to pile into this name. And if we jump back into FinViz, we do see that a few analysts gave new price targets for Snapchat following their Q3 earnings. So we do see here that Wells Fargo gave it a new price target from 95 down to 75. We see that Wedbush gave it an outperform rating and a new modified price target of 88 down to 70. Truist gave it a new target from 100 down to 75. And Rosenblatt gave it a new price target from 100 down to 85. So as you can see, at its current price point of 55, we do have a lot of runway ahead of us to reach those new price targets that were given, 75, 80, 85. So even though the stock is down 26% down a day, we do have a lot of runway ahead of us. So now looking back at TradingView, in order to get a better macro view of where the stock could be headed next, we can draw some Fibonacci retracement zones to get a better idea of where the stock could land. So what you want to do is zoom out here. And from here, you want to grab your Fib Retracement Tool, and recall we are on the daily chart. This is the daily chart. So with this tool, you want to first drop your first anchor at the lowest point of the stock. This is March 2020. You want to stretch this out and bring it to the highest point of the stock that was posted back in September. So you will anchor that there. And let's actually stretch this out a bit. Perfect. So as you can see, previously Snapchat was trading in this range, and that range was between the 78% retracement zone and the 100% retracement zone. It was bouncing within this channel, finally broke through that, and now we've ended up in the next channel here, and this is our next level of support down here, and that is the 61% retracement zone. So we will find support here at $54.14. So keep in mind, we can remain within the zone. For next week's opening, if for some reason we break this support, our next level of support would be down here, which would be our next Fibonacci retracement zone, and this level here would be the 50% retracement zone, and that's a price target of $45.11. Now personally, I don't think we'll get to that level. I don't think we'll reach $45. I do think the stock is way oversold at the minus 25% reduction it's taken. So I firmly believe that the stock will remain in this zone here, and that's between the 61% to the 78% zone. And from there, we do have a lot of runway moving forward, where we can potentially continue higher into the next zone and potentially revisit the all-time highs here of $83. Now let me clear this out. And like I mentioned earlier, it is beneath the 200-day moving average, this blue line. Let me go ahead and zoom back in. So I will say I am bullish on the stock. As you saw earlier, the analyst did give an updated price target for this name. We're at 55. We could potentially head back up to all-time highs, 75, 85. We don't know yet, but at the $55 level, this is the perfect entry point for somebody to go long and hold the stock while it recovers. So now if we were to bounce back from this and recover higher, our next level of resistance would be this 78% retracement zone. And that's a price target of $67. So before we get there, I would recommend you do wait for confirmation for the stock to continue recovering. So confirmation is a few days of green candles and an upward momentum that confirms the trend, that confirms the recovery process of the stock. Once confirmation is enabled, we'll know for sure that the stock is bullish and can continue pushing higher. And lastly, we can grab our info tool here and drop it at our current price point. And as you can see from our current price point, if we point higher north from here to the next resistance zone, that is a 22% gain. As you can see here on the screen, from the current price point of 55 to the next level of resistance, that is $67. That is a 22% gain. And if we're able to push through that and continue higher, our final level of resistance would be the previous all-time high of $83, and that's a gain of nearly 51%. Wow, that's huge. Keep in mind, from the current price point of 55 up to $83, that is a potential 55% gain. That is super bullish, super impressive. This is why I'm so bullish on the name. So I hope you found this information helpful. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.